Hello everyone, it's me Anjana from LearnoHub, the free learning platform where you can study Math, Science and SST absolutely free at learnohub.com. In today's class, we are going to discuss ICSE Class 10 Maths Chapter 1, Goods and Service Tax. There is a very important topic of ITC that is remaining, which we will be studying in this class. We'll understand the concepts with examples and solve more questions from exercise 1B. If you haven't watched my previous video, go watch that video where we have discussed the important concepts of GST. Are you all ready? Let's start. Okay. In order to understand the concept of ITC, we need two important terms, that is input and output GST. Let's take an example. Here we have a manufacturer, a dealer and a consumer or the customer. Farmer sells his product to shopkeeper and shopkeeper then sells it to the customer. During the first transaction, the price at which the farmer sells his product to the shopkeeper is his selling price. We know what selling price, cost price, etc. we have discussed in the previous video. Okay. This is the same price at which the shopkeeper purchases from the farmer. In case of shopkeeper, it is the cost price. Okay. Now what the shopkeeper does? He adds a profit to it. So the price at which shopkeeper sells his product, that is selling price, is equal to cost price plus profit. During the first transaction, whether if it is an intrastate transaction or an interstate transaction, you will have a tax. Even during the second transaction, that is from shopkeeper to the consumers, there is a tax. When you consider this shopkeeper, he is both purchasing the products and he is also selling products. That is, here there is input of goods and output of goods. Input of goods, the tax involved during the input of goods is known as input tax. Clear? The tax during the input of goods is input tax. Then what is output tax? During the output of goods, the tax involved is the output tax. Input GST, the GST paid by the dealer when he purchases a goods or service from a manufacturer or wholesaler. Then output GST, the GST paid by the consumer when he purchases goods or services from a dealer. Now consider the case of this consumer or the customer. We know they are the end users. Do they sell this product to someone else? No, right? They are using the product. In that case, do you think there is output GST? There is input of goods. Sure. Therefore, he will have to pay the input GST. Since there is no output of goods, there is no output GST. Only with respect to the dealer, that is the mid party, we have the input and output GST. Only he can claim for this GST. Now we can calculate the net payable GST or tax liability using this formula, that is tax liability or the net payable GST is equal to output tax minus input tax. We need to subtract the input tax from output tax to get the tax liability or net GST payable. In this session, you will be having problems to be solved using this formula. Okay? Clear? Now you know what input and output GST is. Input tax credit. Input tax credit means that while paying tax on sale, output of goods and services, you can reduce the tax you have already paid on the purchase of the above goods and services and pay only the balance amount of tax. Did you understand? Let's take an example. Say we have three traders, A, B and C. A sells his product to B, B adds a profit and sells it to C. Here we have a selling price, say rupees 100. Okay. During this transaction, there will be a tax. Let's say some 10% tax. How do you calculate 10% of 100? Now you are experts in calculating the tax amount. 10% of 100 is equal to 10 divided by 100 into 100 equal to rupees 10. This is the tax amount. That is, B will be paying 100 plus 10, which is equal to 110 rupees to A. What A does? A takes only the 100 rupees and pay the remaining 10 rupees, that is the tax amount, to the government. Government get rupees 10. Now come to the second transaction, that is B to C. During the transaction of products from B to C, again there is a tax involved. Before that, what B does? B will be adding a profit. Let's say rupees 50 profit is added by B. Then what is the selling price? Selling price is equal to cost price plus profit. Here the cost price is 100, rupees 100 plus profit of rupees 50, which is equal to rupees 150. Again the tax is, say, 10%. Tax amount will be 10% of 150 equal to rupees 15. Okay. This rupees 15 plus rupees 150, C will be paying to B. What B does? B takes rupees 150 and pays 15 rupees as tax to the government. B will be paying to government rupees 15. In this case, do you think the total tax amount paid will be this rupees 10 and rupees 15, that is rupees 25? No. Here what happens is, here comes the idea of input tax credit. If B pays this rupees 15 as tax to the government, this rupees 10 will get credited to his account. That is, the tax during the input of goods will get credited to his account. Here in this case, the tax that he paid during the output of goods is greater. There is a difference of 5 rupees, right? So in this case, it gets credited. If the case is like during the input of goods, the tax is greater, and during the output of goods, tax is smaller. If that was the case, B will have to pay the amount. Clear? So this is the idea. Only B, that is the mid party, can claim for this ITC or the input tax credit. Credit, as the name suggests, the amount that comes into the account. Or another thing that can be done is, B can reduce this amount, that is the input tax, and pay only the remaining amount, that is the net payable GST. We had the idea of net payable GST, that is output tax minus input tax. Only that amount B will have to pay to the government. Clear? Remember this point. Whatever tax consumer pays is the final tax that will reach government. Here what was the amount? Here the tax amount is rupees 15. 10 is paid during the first transaction. A pays to the government. 5 is paid, that is 15 minus 10. 5 rupees is paid during the second transaction. That is, the tax amount paid by the consumer will be the final amount that reaches the as tax to the government. Remember this point. Clear? Now, we'll understand this more when we do the example questions. Here is our first example. Let A, B and C be 3 traders belonging to different states. Trader A sells some goods or services to Trader B for rupees 500 and Trader B sells the same goods or services to Trader C at a profit of rupees 200. Calculate the tax liability of B if the rate of GST is 12%. What are given quantities? First, the transaction, that is A to B and from B to C. A to B. That is, here it is given that A, B and C are three traders belonging to different state, which means both the transactions are interstate transaction. Okay. Now, A sells his products to B at rupees 500. So, the first transaction is from A to B. Here, selling price is equal to rupees 500. In order to calculate tax, we need the GST, that is rate of GST. Rate of GST is also given. Rate of GST is equal to 12%. Okay. How do you calculate the tax amount? Tax amount. In this case, the tax amount will be IGST because it is an example of interstate transaction. That is, we need to find IGST. Okay. IGST is equal to 12% of selling price, that is 500. 12% of 500. Here, this is the input tax because A is selling products to B. That is, here there is an input of goods. The tax involved is the input tax. Therefore, this IGST is the input tax. Input tax is equal to 12% of 500. That is 12 by 100 into 500. Cancelling out zeros, 12 into 5 will be getting rupees 60. So, rupees 60 is the input tax. Next transaction, that is from B to C. B to C is again an interstate transaction. B is the mid party. Here in case of B, there is input tax and output tax. Input of goods and output of goods. Okay. So, here what is the selling price? How do you find selling price? Cost price plus profit. What B does is that B purchases products from A and sells it to C only after adding a profit amount. Here the profit amount is 200 rupees. Cost price is the price at which B purchases from A. That is the price at which A sells his product to B. The same thing, that is 500. 500 is the cost price. So, rupees 500 plus the profit, that is rupees 200. 200 is the profit. Okay, rupees 200. You will be getting rupees 700. So, this 700 rupees is the selling price. We got the selling price is equal to rupees 700. Now, we need to find the output tax. Here again the tax is IGST. IGST is equal to 12% of selling price. Selling price is 700 rupees. 12% of 700 equal to 12 by 100 into 700. This IGST amount is the output tax. So, you can write output tax is equal to, what is 12% of 700? You can cancel out the zeros. You will be getting 84 rupees. So, 84 rupees is your output tax. We got the input tax and output tax. We have to find the tax liability. Tax liability is equal to, tax liability is equal to output tax minus input tax. Output tax minus input tax. Now, just substitute the values. We have input tax 60 and output tax 84. Therefore, tax liability is equal to, tax liability is equal to output tax, that is 84 minus input tax 60. Yes, 60. That is equal to rupees 24. So, in this question, the tax liability we calculated. Tax liability of B. Here it is mentioned, we need to find the tax liability of B. So tax liability of B is equal to rupees 24. Is this clear? First thing, you have to find whether it is an interstate transaction or intrastate transaction. Depending on which we can decide whether we have to calculate CGST, SGST or the IGST. Clear? Example 2. A product is sold from Kanpur in Uttar Pradesh to Banaras in Uttar Pradesh for rupees 12,000 and then from Banaras to Ranchi in Jharkhand at a profit of rupees 4,000. If the rate of GST is 18%, find the net GST payable at Banaras. Here again, Banaras is the mid party, that is transaction from Kanpur to Banaras, and the second transaction is Banaras to Ranchi. So let's take the first transaction. Kanpur to Banaras. Kanpur in Uttar Pradesh to Banaras in Uttar Pradesh, which means this is an example of intrastate transaction. Intrastate transaction. We have selling price is equal to rupees 12,000. What else is given? Rate of GST is given. Rate of GST is equal to 18%. Since this is an intrastate transaction, we need the CGST and SGST. CGST will be equal to, here if the rate of GST is 18%, 9% is CGST and the remaining 9% is SGST. So CGST will be 9% of 12,000, which is equal to 9% of 12,000. Do the calculation. How much do you get? Yes, rupees 1,080. Next, what about SGST? You know, SGST is again 9% of rupees 12,000, same as that of CGST, rupees 1,080. To find the input tax here includes the SGST and CGST. We need to add the SGST amount and the CGST amount. That is rupees 1,080 plus rupees 1,080. You will be getting 2,160. Rupees 2,160 is the input tax in this case. Output tax is when transaction happens from Banaras to Ranchi. Here what is happening? The transaction is an interstate transaction. Interstate transaction. Why? Because Banaras belong to Uttar Pradesh and Ranchi belong to Jharkhand. Two different states are involved during this transaction. Here, first we need to find the selling price. What is the cost price? That is, at what price the trader in Banaras got the product from Kanpur. He sold it at rupees 12,000. So that is the cost price. Selling price we know is cost price plus profit. Cost price here it is 12,000 plus what is the profit that he adds? Rupees 4,000. So 4,000 profit is added to this. 12,000 plus 4,000 will be getting rupees 16,000. Rupees 16,000 is the selling price. That is, the transaction of goods happened at a rate of rupees 16,000. The trader in Banaras sells his product to the trader in Ranchi at rupees 16,000. Now, how do you find the tax amount? That is, we need to find the output tax. Here the transaction is interstate transaction. Therefore, we have to find the IGST. IGST is equal to 18% of selling price, that is 16,000. 18 divided by 100 into 16,000. We will be getting rupees 2,880. So this rupees 2,880 is your tax amount. Here in this case it is the output tax. Find the net GST payable. Net payable GST we know is the tax liability is equal to output tax minus input tax. Only if you know this formula, you will be able to solve problems in this section. Substituting the values, output tax, here it is 2,880 minus input tax is 2,160. 2,160. Therefore, the final answer is rupees 720. Rupees 720 is the net GST payable or the tax liability. In some question, they will be asking you to find the tax liability or maybe net GST payable. Both are the same. You need to use this formula, that is tax liability is equal to output tax minus input tax. Clear? Let's now move on to exercise questions in your textbook. Exercise 1B, question number 1. Fill in the blanks. When the goods or services are sold for rupees 15,000 under intrastate transaction from station A to station B and the rate of GST is 12%, as per GST system, selling price at station A is equal to CGST equal to 6% of 15,000 equal to SGST equal to 6% of 15,000 equal to cost price at station B if profit rupees 5,000, selling price at station B is equal to, now the same goods or services are moved under interstate transaction from station B to station C and the rate of tax is 12%. GST equal to cost price at station C. So we need to find many quantities. Let's start. Selling price at station A. Here it is given that the product is sold for rupees 15,000 from station A. So selling price at station A, it is a direct question. The answer is rupees 15,000. Now here the first transaction is from A to B, which is an example of intrastate transaction. Intrastate transaction. We need to find CGST and SGST. It is also given that CGST is the 6% of 15,000. CGST equal to 6% of 15,000. 6 by 100 into 15,000. Zeros gets cancelled. 150 into 6. You will be getting rupees 900. So this is the CGST. CGST is equal to rupees 900. Then what about SGST? SGST is also given 6% of 15,000, which is equal to rupees 900. We know CGST and SGST are equal. Next is the cost price at station B. Cost price at station B means at what price B is purchasing the product from A, which is selling price of A will be equal to the cost price at station B. Therefore, it should be equal to rupees 15,000. Okay. Now, what B does is, at station B, a profit of 5,000 is added. Then the selling price at station B. selling price is equal to cost price plus profit. Here the cost price is 15,000 and the profit is given 5,000. Profit is 5,000, which means here the selling price should be equal to rupees 15,000 plus 5,000, 20,000. Okay, so at station B, selling price is equal to rupees 20,000. Now, the same goods or services are moved under interstate transaction. That is, from B to C, the transaction is interstate transaction. And the rate of tax is also given 12%. We need to find the GST. Here in this case, the GST will be equal to IGST because here it is an interstate transaction, which means 12% of selling price. Selling price is 20,000. 12% of 20,000 equal to 12 divided by 100 into 20,000, which is 2,400. So 2,400 rupees is the GST. Rupees 2,400. Now, next we need to find the cost price at station C. How do you find the cost price at station C? It is the price at which the product or services is being purchased at station C. It will be equal to the price at which B sells. Station B sells their product. Here we know selling price at station B is rupees 20,000. Therefore, cost price at station C should be equal to rupees 20,000. So, this is how you have to solve this question. Problem number 2. This is question number 3 of exercise 1B. Goods or services are sold from Kota, Rajasthan to Mumbai for rupees 20,000 and then from Mumbai to Pune. If the rate of GST is 12% and the profit made at Mumbai is rupees 5,000, find the net GST paid at Pune if the dealer at Pune is the end user. Here, the first transaction is from Kota in Rajasthan to Mumbai. Here, the transaction is between two different states. Therefore, the transaction is an interstate transaction. Then, what else is given? Selling price is given. Selling price is equal to rupees 20,000. Rate of GST is given. Rate of GST is equal to 12%. Here, we have to find the net GST paid at Pune. Pune, it's also given that the dealer at Pune is the end user, which means we have to calculate the tax liability, that is by knowing the output tax and input tax at Pune. Okay, so let's go to the second transaction, that is from Mumbai to Pune, because in the first transaction there is no Pune involved. Okay, here what is the selling price? This is an example of intrastate transaction within the same state. This is an intrastate transaction. We need to calculate the selling price. Selling price is equal to cost price plus profit. Here the cost price is the amount at which the dealer in Kota sells their products to dealer in Mumbai. That is the selling price. Rupees 20,000 is the cost price here, which is equal to 20,000 plus the profit. Profit here is 5,000. 5,000 you will be getting 25,000. Selling price equal to 25,000. Now, we need to calculate the tax. Here, first we need to find the CGST. CGST. Tax percentage is 12%. That is CGST will be 6% of 25,000 equal to 6 by 100 into 25,000. Cancelling out zeros, you will be getting 1,500 rupees. CGST is 1,500. What about SGST? SGST is equal to CGST. That is also equal to 1,500 rupees. Knowing this, you can calculate the total input GST. Input GST will be equal to CGST plus SGST. That is 1,500 plus 1,500. Because we know we are considering Pune. Input of goods happen from Mumbai to Pune. The GST is equal to 1,500 plus 1,500, that is 3,000. What about output GST? Here it is given that the dealer at Pune is the end user, which means the dealer at Pune does not sell his product to some other place. There is no output of goods, there is no output GST. Therefore, the net GST payable, the net GST paid will be equal to what we got as input GST. We have no output GST. That is 3,000 rupees. This is the final answer. Okay. Do remember one thing. It is with respect to Pune. In Pune, when you consider there is no output of goods, no output GST. Only input GST is there. So, we need to calculate the input GST, which will be the net GST paid. Clear? Next problem. Problem number 3, that is question number 4 of exercise 1B. A is a dealer in Banaras, Uttar Pradesh. He supplies goods or services worth rupees 8,000 to a dealer B in Agra, Uttar Pradesh. Dealer B in turn supplies the same goods and services to dealer C in Patna at a profit of rupees 1,200. Find the input and output taxes for the dealer C under GST system if the rate of GST is 18% and C does not sell his goods or services further. First, we need to know the transactions. Here, the first transaction is A to B. That is from Banaras in Uttar Pradesh to Agra in Uttar Pradesh. The transaction is an intrastate transaction. Okay. Second transaction is from B to C. That is Uttar Pradesh to Bihar, which means it is an interstate transaction. So, first step is complete, identifying what type of transaction is happening here. Now, what is the selling price? Selling price is rupees 8,000. A sells the products at rupees 8,000. Then, rate of GST is given. Rate of GST is equal to 18%. We need to calculate for C, that is input and output taxes with respect to C. Therefore, in the first transaction, we don't have C here. Coming to the second transaction, that is B to C. Here, what is the selling price? Selling price is equal to cost price plus profit. Cost price will be the selling price of the goods and services from Banaras. Dealer A sells at rupees 8,000. This is the price at which dealer B purchases. So, the cost price is equal to rupees 8,000 plus what is the profit that is added here? 1,200 rupees. So, rupees 1,200 is the profit. You will be getting rupees 9,200, which is our selling price. Clear? Next, here it is an interstate transaction. In case of interstate transaction, we need to find IGST. Once you find IGST, you will be getting the input tax. IGST is 18% of 9,200 equal to 18 divided by 100 into 9,200. Cancelling out zeros, you have 92 into 18. 16. 9 8s are 72. 73. 2. 9. 6. 5. 1 6. So, rupees 1,656 is the IGST. The IGST amount is our input tax. So, input tax is equal to rupees 1,656. Next, we need to calculate the output tax. Output tax. It is clear from the question that C does not sell his goods or services further. Since C is not selling his goods or service, there is no tax involved. So, output tax should be 0. Output tax will be there only when there is an output of goods. Here, there is no output of goods, no output tax. Therefore, our output tax is equal to 0. Input tax is rupees 1,656. Output tax is equal to 0. This is the problem 3. Clear? Problem 4, that is question number 6 of exercise 1B. A dealer X in Hapur, Uttar Pradesh supplies goods or services worth rupees 50,000 to some other dealer Y in the same city. Now, the dealer Y supplies the same goods or services to dealer Z in Calcutta at a profit of rupees 20,000. Find output and input taxes for dealer Y. Net GST payable by dealer Y. We have to find with respect to dealer Y. So, the first transaction is X to Y. X to Y. What type of a transaction is it? Interstate or intrastate? It is given that in the same city. Same city means intrastate transaction. Intrastate transaction. Then, the second transaction is Y to Z. Z is in Calcutta, which means the transaction is interstate transaction. Interstate transaction. Now, what is the selling price here? At what price does X sell his products to Y? It is given rupees 50,000. In this case, we will be having CGST and SGST because it is an example of intrastate transaction. So, first, rate of GST is equal to 28%. Of this 28%, you will be having 14% CGST and 14% SGST. CGST is equal to 14% of rupees 50,000. What is 14% of rupees 50,000? Do the calculation. 14 by 100 into 50,000. 14 divided by 100 into 50,000. Cancelling out zeros. You will be having rupees 7,000. Okay. This is the CGST. What about SGST? Same calculation. That is 14% of rupees 50,000. You will be getting rupees 7,000 as the SGST. We got CGST and SGST from which we can calculate the input tax now. Input tax is equal to CGST plus SGST. Here 7,000 plus 7,000 that is equal to 14,000. So 14,000 rupees is the input tax. Now we'll move on to the second transaction. So in the first transaction there was an input of goods. Now here it is an output of goods. We are considering with respect to dealer Y. What is the selling price in this case? Cost price plus profit. Every question we are doing the same thing. Cost price will be equal to this price, right? At what price? X sells their product to Y. That is 50,000. Plus profit is 20,000. 20,000 profit. Then you will be having selling price is equal to rupees 50,000 plus 20,000. Yes, 70,000. In this case, we have interstate transaction. Interstate transaction means we have to find the IGST. IGST is equal to 28% of selling price, that is 70,000, equal to 28 divided by 100 into 70,000. Find the answer. 28 into 700. You will be getting 19,600 rupees. Is this the answer you got? IGST is equal to 19,600 rupees, which is the output tax. So, output tax is equal to this amount. That is 19,600 rupees. So, our first question was to find output and input taxes for the dealer Y. Second question is to find the net GST payable by dealer Y. Net GST, that is tax liability or the net GST payable, equal to output tax minus input tax. Remember this formula always. Only then you will be able to solve problems that you get from this side. Okay. Here the output tax is rupees 19,600 and the input tax is rupees 14,000. 19,600 minus 14,000. You will be getting rupees 5,600, which is your final answer. So the net GST payable by dealer Y is equal to rupees 5,600. This is clear, right? So first thing to identify is what type of transaction is happening and also the dealer. Here in this question it is dealer Y, that is the mid party. If it is the end user, that is in this case if it was Z, there you won't be having output tax. Remember these things while solving the problem. If it is the mid party, you will be having both the input tax and the output tax. If it is the end user, then there is no output tax. Clear? Problem 5, that is question 7 of exercise 1B. Consultancy services worth rupees 50,000 are transferred from Delhi to Calcutta at the rate of GST 18% and then from Calcutta to Nainital with profit rupees 20,000. At the same rate of GST, find the output tax at. We need to find the output tax at. First question Delhi, second Calcutta, third Nainital. The first transaction is Delhi to Calcutta. Then from Calcutta to Nainital. So here, let's take the case of Delhi. What is the selling price? Selling price is equal to rupees 50,000. In case of Delhi, there is no input of goods, no input tax. There is only output of goods. Hence, you will be having the output tax. This transaction is an interstate transaction. Okay. In case of interstate transaction, you will have to calculate the IGST. Rate of GST is given. Rate of GST is equal to 18%. Rate of GST is 18%. Now, IGST is equal to 18% of rupees 50,000. 18% of rupees 50,000. That is equal to 18 divided by 100 into 50,000. Cancelling out zeros, you will be getting rupees 9,000. So 9,000 rupees is the IGST. Here IGST is our output tax. Output tax is equal to rupees 9,000. Output tax at Delhi. The first thing we calculate is the output tax at Delhi. So the first question's answer is rupees 9,000. Next we are coming to Calcutta. In case of Calcutta here is the mid party. There is both input of goods and output of goods, which means there is input tax and output tax. Here we need to calculate only the output tax. What is the selling price? Cost price plus profit. Cost price plus profit. Here the cost price is equal to 50,000 plus what is the profit? 20,000. 20,000 profit. So the selling price is equal to 70,000. Now in this transaction again, it is an interstate transaction. In case of interstate transaction, we need to find IGST. IGST equal to 18% of 70,000 equal to 18 divided by 100 into 70,000. Cancelling zeros. 18 into 700. What do you get? 12,600. This 12,600 is the IGST. In this case, output tax at Calcutta is equal to rupees 12,600. Now the third case, that is Nainital. Here we know there is no output of goods. In case where there is no output of goods, there is no output tax, because at Nainital we have the end users. So output tax at Nainital is equal to 0. Output tax at Delhi is rupees 9,000. Output tax at Calcutta is rupees 12,600 and output tax at Nainital is 0. So this is how you can solve this problem. Here is our last question for this session, that is question number 11 of exercise 1B. For a trader, marked price of a refrigerator is rupees 15,680 inclusive of GST at the rate of 12% on the marked price. Gagan, a customer for this refrigerator, asked the trader to reduce the marked price of the refrigerator to such extent that its reduced price plus GST on it is equal to marked price of the refrigerator. Find the required reduction. This is somewhat a different problem, so be careful. We don't know what the marked price is. In that case, let marked price is equal to rupees X. If there is something unknown, we will be introducing this X here. Then what else is given? Rate of tax is given, that is 12%. Then here this rate of tax, that is 15,680 includes the tax also, that is inclusive of GST, which means X is the marked price. X plus GST. GST will be 12% of X. Including GST, we have this amount, that is rupees 15,680. Okay. X plus 12 by 100. X is equal to 15,680. X plus 0.12 X is equal to 15,680, which is equal to 1.12 X, 15,680. We can find the value of X, that is 15,680 divided by 1.12. I won't be doing the calculation. You can do it easily. The answer will be rupees 14,000. Okay. Rupees 14,000 is the value of X. What was X? Marked price. So we got marked price is rupees 14,000. Now, Gagan, a customer for this refrigerator, asked the trader to reduce the marked price. He wants the marked price to be reduced. Okay. Let price reduction equal to some rupees Y. Okay. Rupees Y is reduced. Reduced price plus GST on it. Now, what will be the reduced price? Reduced price will be equal to marked price minus Y. Here the marked price is 14,000 minus Y. We got the reduced price. Come to the question. Reduced price plus GST on it is equal to, GST on it means 12% of 14,000 minus Y is the GST. Okay. When you add this, you will be getting marked price of the refrigerator. That is X, 14,000. This can be written as 14,000 minus Y plus 12% of 14,000 minus Y is 12 by 100 into 14,000 minus Y is equal to 14,000. Now the calculation part will be having 14,000 minus Y plus 12 by 100. We know is 0.12 into 14,000 minus 0.12 Y is equal to 14,000. We have 14,000 on the right side and the left side, which can be cancelled. Now we'll take Y terms on one side and the constants on the other side. That is here minus Y minus 0.12 Y is equal to negative of 0.12 into 14,000, which is equal to minus 1.12 Y equal to 14 into 12. 861, that is 168,000, and you have two decimal which can be removed. That is Y is equal to 1680 divided by 1.12. Here we have a negative sign. So negative sign on the left hand side and the right hand side can be cancelled. You will be getting 1680 divided by 1.12, which is equal to 1400 1,500 rupees. Do calculate this. You will be getting rupees 1,500, which is the value of y. Find the required reduction. Required reduction is y. That's all for today. In today's class, we have discussed the idea of ITC. Hope you all understood this. By this, our chapter is complete. In the next session, I'll be back with the next chapter. Until then, stay tuned to Learno Hub. Learno Hub free hai, par best hai. Thank you.